Are you still waiting on the sideline for distressed properties? Well, amidst the whispers of looming distresses and foreclosures, investors find themselves at a crossroads. With billions of dollars in dry powder waiting for the inevitable outcome, the stakes have never been higher. But here's a twist. Contrary to expectations, distress levels aren't nearly as dire as anticipated. Now, office properties are facing the greatest levels of distress and foreclosures due to being valued below pre-pandemic levels. Retail properties are experiencing an upward pricing momentum with values about 8% higher than pre-pandemic levels, limiting distress potential. Hotels and industrial properties are maintaining values roughly on par with their peaks, with low distress in the industrial sector and distress in hospitality properties being property-driven rather than market-driven. Self-storage is experiencing an increased comfort due to vacancy rate improvements, with limited distress expected over the short term. And my favorite, multifamily. Now, prices have fallen since peaking in mid-2022, but are still on average above pre-pandemic levels. Now, some investors who bought at the peak may face challenges, but distress may not be widespread. But since then, prices have fallen about 14%. So they're still 15% above pre-pandemic levels. Now, I'm looking at this, I think multifamily investors may have some unique experiences and challenges coming up. In general, I don't think the values have fallen enough to create a wave of distress. But there are probably going to be some investors who bought at the peak of the market, who are undercapitalized and underwrote the assets with overly optimistic assumptions, who are now facing some real challenges.